All right, folks, welcome back. This is going to be a review on June 22nd, 2022. This is the economic calendar for tomorrow, for Thursday, June 23rd, 2022. As you can see in the New York session at 8:30, we have unemployment claims for the dollar index. That's medium impact right here. And then we have at 9:45, flash manufacturing PMI number and flash services PMI. Dollar-based, medium impact. And 10 o'clock here is the heavy hitter. This is the high impact dollar affected, which is really going to cause all the other markets as well. But another testimony by Fed Chair Powell. So, what does that mean? It means basically wait until the dust settles. Okay, it's just like today. I explained on Twitter. I'm not trying to be ahead of a Fed chair testimony. Not trying to do it. A lot of manipulation comes in usually when that occurs. And your analysis, your expectation, your bias, the sentiment, everything can be disrupted based on what they say and how the market makers interpret that in terms of manipulating the present sentiment or engineering new sentiment. All right, so we were talking about dollar CAD because dollar CAD today on Wednesday, June 22nd, 2022, it had a high impact news driver at 8:30, the CPI number for Canadian dollar. This is the daily chart of the dollar CAD, and I'm drawing your attention to this candle here. The body's open to close, split that in half. That's mean threshold of a bearish order block. The market trades up into that today, hits it as resistance, and stalls there. So we're going to be using this level here in the lower time frame charts. Here's that red level. Again, it's the daily bearish order block mean threshold. Yes, it's a mouthful, but it is something that I teach with my order block theory. It is something that's significant. It's not something that's contrived. It's something that really has an impact on price action. And you can see how we traded up into that today. We swept through it, yes, and found some resistance to it. Then finally moved lower, attacking all of the run up in here. There's sell side resting below these relative equal lows, and now buy side resides here. So we have relative equal highs, relative equal lows, ahead of another Powell testimony tomorrow with unemployment numbers. And there's a lot of potential for volatility that may be not favorable. So we'll wait until about 15 to 20 minutes after Powell does his jawboning. Any imbalance or any liquidity pool that would be obvious that it would be trying to attack, then we'll work with that. It should make itself available. All right, so on the 15-minute time frame, again, buy side liquidity pool, sell side liquidity pool. We were looking at the dollar CAD and the likelihood of reaching down into a discount. So the discount would be from low to high, split it in half, find some imbalance here and here. And we're going to look at the price runs in here on the 5-minute chart. So 7 o'clock in the morning to 10 o'clock, that's the ICT New York kill zone. 8:30. The market drops down. Yes, it takes out that short-term low. Yes, it takes out that short-term low. But using just the 5-minute chart, this is what I'm giving you here. So I'm going to use this level here for the 5-minute. So if you're a market trader that has adopted this model and you don't want to use less than a 5-minute chart, you're demanding the 5-minute chart be your only lowest time frame. In other words, you're throwing out the rules of dropping down from the 5-minute to 4-minute to 3 to 2 and 1 until it gives you a very refined fair value gap to trade with after a shift in market structure. Then this is what you would have to wait for this low. Even though it comes back up and rebalances here, this is a little bit more meaningful displacement. See how much more energetic that is, and it closes on its low versus this down here. Now technically for me, this is enough for a shift in market structure, and we could be short in here. But drawing a contrast between this taking out that short-term low here versus this taking out that short-term low. This is the better one, more conservative approach. And then aiming for the fair value gaps over here, as I mentioned on the 15-minute time frame. The imbalance here, we trade back up into that, hit a bearish order block, then starts to work lower. Small little fair value gap in here, comes back, rebalances that. Real choppy, then breaks lower once more, and again attacks the discount arrays. Here's a 4-minute chart just to show you a little bit more refinement. Now on the 4-minute chart, it looks a lot more meaningful because on the 5, it looked like a big, like a doji almost, okay, where it came down and had a really long wick. You don't see that so much on the 4-minute chart. So this is why I'm teaching you, and the model teaches, to drop down from the 5-minute to the 4, 3, 2, 1 until you find a time frame, and this is the 1. Anything less than that is not required. Like we don't need a 3-minute, we don't need a 2-minute, we don't need a 1-minute. Short-term shift in market structure here, nice displacement. It comes back up. What's it do? Fills in a fair value gap. So your stop can be here, or if you want to be a little bit more conservative, you can use that swing high here, because it's a swing high prior to the fair value gap forming. So very, very small, tiny little stop loss, and reaching for a discount array, taking us down below 129.30, 129.25. So not bad. Over 50 pips or so for this. Rolling right into the S&P futures contract, September 2022. We're going to begin with the hourly chart, and I want you to take a look at what we see here. All right, and we're going to ask you to pause the video, look for things that make the most sense in terms of where does your eye draw to, and what do you see without putting in the lipstick on the chart yet. All right, if you're not ready, make sure you're pausing the video. All right, so we have a pool of liquidity over here in the form of sell side, relative equal lows. The market runs up yesterday, creates relative equal highs, breaks lower overnight, midnight, New York time. We drop below sell side, creating a Judas swing, low of the day in London, rallies up, consolidates a little bit, and then rallies aggressively above the opening price, which is what this is here at midnight. So if we're bullish on stock index futures, it creates a potential low of the day. Power 3 is we want to be buying at or below, ideally, for a bullish day, and target relative equal highs. That's good. But we can trade in close proximity to the opening price as well. So if it just starts to go above it, we can utilize that. When would we be doing that? Well, in this instance, we had Powell speaking. So it's already done its work by creating the low of the day, and it's starting its energetic run to create the profit release portion of the daily range, where it's just starting to really run, expand, creating that big daily expansion, attacking buy side liquidity over here. On a 15-minute time frame, the New York AM session between 8:30 and 11, that's what's being highlighted here. Again, that's specific to stock index futures. It's not the same as the Forex kill zone, 7 to 10. 8:30 in the morning to 11 is the AM session for stock index futures. So your setups will form between those time periods. Have a little retracement here. I would not, and I did not participate anything at all in the market until Powell had already started talking. So that's kind of like what I'm showcasing tonight and what we expect tomorrow when he talks again at 10 o'clock, New York local time. The market runs above New York midnight opening, and you have to consider power 3. So what did we do? We opened, Judas swing lower, stop hunt, see that? Rallies, retracement, starts to rally again. Do not be afraid to buy just above the opening price. Don't think it's going above here to go down. It's already done the work here. Just like I was explaining last night in the review portion, there is no reason for you to be fearful of this reversing and going lower, because it's already priced in all the business that's needed for the low of the day forming. And because it's waiting for Powell at 9:30 Wednesday. It rallies through it aggressively. What's it going to be running for? This level up here. That buy side liquidity pool. Those relative equal highs. And we ran right into it here. And between 10 o'clock and 11 o'clock, it creates a nice little run. Relative equal highs. Retraces into the lunch hour. Short-term swing low taken. Then they pump it up through, taking out the buy side that would be resting relative equal highs here. They take that and then retrace back into the range. On the 5-minute chart, this is what I was watching today and why I was not afraid to go in with live funds. It was a live account. I used this fair value gap. Yes, we were above the New York opening price. If we weren't monitoring and seeing Powell speaking at 9:30, I would have been in ahead. But because Powell can create the opportunity, the stage, if you will, for heavy manipulation, once he starts talking, and that's in here, it runs above the opening price. Watch what happens. Pay real close attention to what I'm going to show you here. The market rallies up. It opens, drops down, rallies again. It opens, drops down, rallies again, creates a fair value gap. I'm not afraid to buy in here. So as the market's dropping down, I'm buying that. That fair value gap, I'm buying it with the expectation it's going to run above the 37.85 level. More specifically, 37.83 3/4. That old high. Why am I avoiding any fearful feelings or nervousness about being a buyer here? Because we've already done the work of running stops down here. We retraced ahead of Powell and the equities open at 9:30. The market rallies above the opening price of midnight New York time. So now what we're expecting is the range to expand to buy side. This is the first fair value gap once we got above the midnight opening price. So New York time, midnight, you have to set a time or a clock on your computer or just buy a clock that you can keep at your trade desk that tells you the time locally in New York, all the time, year round. This is the very first setup that I can trade based on my personal rules. I can't trade ahead of Powell because he could literally clean my clock, and everyone else that would be trading against him or whatever effects would be caused in the marketplace because of his jawboning. Now, I'm not of the opinion that what he says moves the market. I believe, this is my interpretation, that way you can understand it. You don't have to subscribe to it, but this is what I view and this is what I think happens. He says things. Those individuals that are running the markets, the market makers, those that are in control, that can manually go in and twist things and make things happen, they're going to listen to what he's saying, and they may choose to go against what his testimony is implying. If he's hawkish, if he's dovish, it doesn't matter to me. I'm waiting to see what the price of the markets are doing. That's what I care about, because I'm not smart enough to understand what that man's saying and how it might relate to immediate or near term or intermediate term prognostication about the marketplace. I don't think there's any value in that. Now, if we're going to talk about fundamentals, interest rates and interest rates differential for Forex, those fundamental things, that is a reality. And I am concerned about those things. But whenever there's a speaker or a testimony, something to that effect, I don't want to be in front of that, because anything can happen. And if you're in here trading with live money, you're gambling. So while you're learning and working your demo account, don't create the bad habit of trying to gamble ahead of a Fed chair speaking. It's just like FOMC or a rate announcement. You're gambling. You really have no idea what you're doing. And if it works out, you can't attribute that as skill. And if it doesn't work out, you own it. You bought it. Okay, so eat it. So this is the very first setup. And how many times did it go back and forth in here? Look at the range from the high and the low, each candle. So it's had opportunity to drop back down below the opening price. It didn't. Then we had this small little imbalance here. The market drops back down in. Smart money sees that. They dogpile on it. And then off to the races we go. Now, contrast this type of movement versus the dollar CAD. Dollar CAD had high impact news at 8:30. Dollar CAD had its setup based on the model I teach. Which one had better price delivery? Without a doubt, index futures. So I see the folks in the comment section, and one of the members is actually a charter member from my very first group, 2016, asking, why am I moving away from Forex? I am staying away from Forex because there's better trading in index futures right now. And I'm also concerned that there may be a black swan event in Forex, and I don't want to be a victim of that. Now, that's not to say there won't be a black swan event in the stock market. Okay, the bottom can fall out of this thing any day now and literally wreck everyone. There's risk in every market asset class right now across the board. I'm trusting this market because I'm not going to be trading large positions. In Forex, I could be trading a very large position. In index futures, I'm not going to be trading a lot. Okay, the largest position I've put on this year has been 10 minis. That's it. That's it. That's the largest position I'll put on. So that's $500 per point. If a big move occurs, it'll hurt, but it won't kill me. Versus if I put on millions of dollars of leverage in Forex, and then we have a ridiculous gap or black swan event, that could really, that could do some damage. And I don't want to do that when I feel my experience is telling me not to be there. My students know that I've been telling them this. This is not something new. I'm not throwing a curveball. I've been very public about it and very candid about it. I can still see moves coming. I'm just not putting real money behind it like I'm putting real money behind the index futures trading. Okay, so there's a difference there. A lot of you have complained and hemmed and hawed about how, I want to see ICT use a live account, trade with live funds. And then when I start doing it, it's not enough. So I'm not going to do acrobatics to try to please everyone. I'm going to do what I want to do, how I want to do it, when I want to do it. And if it doesn't fit you, if it doesn't scratch your itch, I apologize. I'm doing my best to have fun doing what I'm doing, but it's not going to be the answer for everyone. The back and forth motion of price in here, it was showing that it has an imbalance here. It started to run quickly, and then this is the first rebalance to that level here. So once it did that, I'm buying it. And the draw on liquidity was the buy side liquidity here. And that's about it. I did a lot of talking in this one. I didn't want it to be that long, but I know I saw a lot of folks asking on my trading view. They were sending me messages, and they're also talking about it in the Twitter, how they wouldn't be able to take this trade here because it would be viewed as chasing price in their opinion. And no, the model didn't speak based on what I teach in the YouTube channel, but I'm not limited to that. So I mentioned that we would be drawing to 37.83 3/4, basically this level up here. And we watched it unfold today live, but it required me to see the movement above the opening price here. And there it is. So hopefully you found this one insightful, and do not be discouraged, because every time a Fed chair comes out, just know I'm not taking a live trade until there's some talking and the market can manipulate current price sentiment. Then I'll look for imbalances and or a stop run, and then I'll engage. But otherwise, I'm sitting on my hands patiently. And it might move like I wanted it to do and I miss a move, or I'm thankful that I didn't engage and then it does something that maybe I was looking the opposite to unfold. And then I'm thankful that I didn't engage, because these are the rules I've adopted over the years. So 30 years of doing this stuff, you have to have rules that you have to treat hard and fast, and they're just rigid. You don't break them. And that's one of them here for me. And I'm encouraging you all to do the same thing. Don't look at these types of moves like here and say, oh man, I could have bought that. I would have been better than ICT. What happens if it didn't do that? What happens if it did this type of move the other direction, but more quickly? Yeah, that's what can happen. Okay. It's easy with the hindsight looking back to say, oh, it would have been better if I would have did this, but you weren't doing that when the market was posting and creating the chart. So don't think for a moment that that's the better decision or the right way of doing it. The right way is respect the risk. Trust me when I tell you, respect the risk, because you can be undone on days like this. And we're having one again tomorrow with more volatility likely, because we have unemployment data. We have other I can't recall off the top of my head what the other factors were, but there was another 9:45 data point that's going to come out, and then the 10 o'clock Powell testimony. So the earliest I'll take a trade is probably going to be 5 minutes after 10. Okay, between 5 minutes after 10 and 10:20, that area, that might be where I look to take a trade. Or I may not do anything tomorrow, and guess what? That's okay. It may not be okay for you, but it's okay for me because it's my money I'm risking. So until I talk to you tomorrow, Lord willing, be safe.